Hello and welcome to another edition of the Moving Iron Podcast. This podcast is proudly provided by Axon, helping dealers move more iron for almost 100 years. Find out more at axontire.com. Axon was started almost 100 years ago out of a passion for keeping agriculture moving. It's that same passion that drives them today. With a vision for a better experience for both farmer and dealer, they set out to create a better way to move more iron. When you partner with Axon, you get immediate access to a full range of products and solutions designed to meet the complex needs of today's grower. Axon carries all major brands and sizes of tires, wheels, and tracks. From custom colors and sizes to fully customized wheels, you can have the solution for virtually any problem today's farmer is trying to solve. To find more or become an Axon dealer, please visit axontire.com.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron, time and time again. Through the years you'll find us here. Moving iron.
Hello and welcome to Moving Iron Podcast. Mark with Shawn Hackett. This edition of Moving Iron Podcast is brought to you by Axon Tire, helping dealers move more iron for the past 100 years. For more information, go to axontire.com. Also, if you're looking for a great place to find great sales tools for your salespeople, check out Arrow at heyarrow.com. Shawn is with Hackett Financial. Is nice enough to come on a couple times a week and talk about what's going on. And Shawn is on location today. He is in Lafayette, Indiana, at Purdue, giving one of his speeches, and I'm sure heads were exploding in the crowd as you're doing that, Shawn.
Yeah, they're still mopping up now. So,
for those of you that haven't sat through one of Shawn's presentations, the look on people's faces when he starts talking about the stuff that's coming down with the weather effects that we've talked about here all the time, is probably one of the most entertaining things I get to watch when I've been a part of that, because it's stuff they've never heard. It's for a lot of people, it's the first time they've ever heard it, and it's And the way you lay it out,
no one really knows what I'm going to talk about. And then when I start talking about the sun and orbital theory, all of a sudden they're like, this is very different.
What? The sun has effect on the weather? When did that start happening? So yeah, it's interesting. If you ever get a chance to hear Shawn give a speech, don't hesitate to go. It's well worth your time. You're going to learn something great there. So, well, Shawn, it's been a kind of a crazy week. You know, we had Friday had a big sell-off. Monday and Tuesday, we continued that sell-off through just about everything that's out there. And as you take a look what's going on now, yesterday and today, both markets are starting to rebound a little bit. So I guess as you take a look at what's going on from an ethanol perspective, I want to hit on this real quick. I read an article yesterday talking about some concerns with world sugar supply because of the amount of ethanol being produced in Brazil and India with sugar. There was some concern with world supply of sugar. Now, that was the first time I heard about that. You and I have talked about that extensively on here, that both India and Thailand and that Southeast Asia region of sugarcane production had massive crops. Obviously, Brazil had some issues with their sugarcane crop because of 3 or 4 freezes that came through there. So I guess, what's your reaction to that headline there?
Yeah, I just think it's kind of, I think it's just kind of old news to some extent. You know, ethanol's been strong. I mean, the margin, the ethanol in the U.S., the corn buying is very strong. The margins are very strong. Production's very strong. You know, it's all came from the oil market going from negative $35 a barrel to $85 a barrel. You know, and but now we've just seen a $20 decline in crude oil. What does that mean going forward? Is the ethanol train going to slow down a little bit? I would worry about that a little bit more than I think the most important thing with markets, you always have to be looking ahead and saying, has that already been traded? Is Brazil tightness already been traded? Is Brazil lower ethanol production been traded? I would argue it has already in the $20 sugar price that we've seen already,
Yeah, and that's like you're talking about. I've been watching gasoline futures and diesel futures here the last week or so when this big sell-off in oil happened last week. And like you talked about, both of those markets are just getting decimated right now. And you start looking at how that price is being readjusted to what's out there. It hadn't really affected
there's a lag effect.
Price,
it's not an immediate impact, but if we stay down here and we don't rebound right away, that will filter into lowering the margins, and all of a sudden things will, not be as rosy on that front. And so it's ethanol is always a very volatile area that has a lot of swings to it. We might be ready for a downswing if this crude oil thing is for real.
Yep. All right. I did have a Twitter question come in, and Kenny Roberts is the guy that sent this to me, and he asked if we were going to talk about cotton today, and we typically do talk about cotton on Thursday. So let's talk about that a little bit. When you look at what's going on in the overall cotton market right now, you're still seeing some movement there. I mean, it's still staying pretty strong. There's been some dips here and there, but I guess as you take a look what's going on in cotton, what's your thoughts there?
Well, it got hit really hard. We got up to 120 a pound, and we got knocked down to 104, 105. I don't know what it's doing today, but look, it's a very economically sensitive ag market. Who knows? We could speculate why China's bought so much. They did, but that's not real demand. What I mean by that, Casey, that doesn't really mean that end user demand is strong. It just means China's buying is strong, and I worry that if China has kind of, bought it all, now they're set for a while, and they pull back the throttles on their importing U.S. cotton, and the end user's demand is less than we think it is. I don't know. I'm not sure that the current ending stocks globally and in the U.S. are going to be maintained going forward. I'm just worried about the economic fallout from all this inflation we've been seeing and the potential additional headwinds from how this virus and how the government decisions that are made around the world impact consumer sentiment and consumer demand for clothing and cotton products.
Mm-hmm. Yep, and cotton did make some pretty big moves downward here of late. I mean, it got up to about, like you said, 117, 118, 120, I guess, and then it came back down to, I think right now we're trading at, as of 10:47 Eastern time, $1.11 an ounce. So price is still high, but there again, depending on what side of that rise up or rise down.
I mean, cotton needs to stay high enough so the acres get planted. So yeah. I think the market will maintain some high level of price range in order to ensure that happens and that they confirm that it happens. But I think, if those acres in Texas and the Deep South get planted in good fashion, I just think the balance sheets are the ending stock balance sheets are going to explode next year, and that it could be a first quarter down kind of a phase here with cotton. They just need to get those acres planted just in case. But so I'm telling my customers, it's time to cash sell. It's time to get that locked in. I mean, that's a good price, and it works under all and any circumstances. So,
yep. All right. So a lot of this kind of rebound that we're seeing now is kind of from the fear of the Omicron COVID virus that coming out of South Africa. Yesterday, we did get a confirmation that the United States got their first case out of California. Natural gas had a big fall off as well. When you look back at what happened Friday with everything else, starting to see some rebound there. Right now, it looks like we're trending up a little bit, about 429 out there. So I guess as you take a look at what's going on with natural gas, what are your thoughts there? And one more thing too. One other question kind of on top of that. What effect do you think that the long term of this, the new variant is going to have on natural gas?
Well, if we shut everything down, of course, it would be a pretty large impact like it was before, right?
Right. Of course, yeah.
But obviously, if we have, right now, demand is going to be driven by the winter in the Northern Hemisphere, and of course, especially, of course, North America. If I don't think demand is going to be a problem with a cold winter. The demand might be a problem if we put more restrictions on and we have more economic headwinds and we come out of the winter season. That's where the demand side becomes more vulnerable. But I think with the kind of cold winter we're looking at, Casey, that I don't think demand is going to be an issue, unless they just shut everything down all of a sudden out of nowhere. And I don't think they're going to do that. At least right away. I don't think they're going to do that right away. I think it doesn't seem like they're ready to do that right away, but I could be wrong.
Right. Now, I think it's going to be a long road to hoe to get the economy to shut back down like we did in March of 2020. I don't think that's going to be, or 2019.
Yeah, and I think as long as the market gets comfortable that, however long or however meaningful this current surge is, that it doesn't lead to a lockdown. It could lead to, canceling flights from South Africa, more mask mandates. But I mean, that's fine. Just as long as it doesn't mean a total shutdown, I think we'll muddle through, So,
Right. All right. One other thing that I've been paying attention to, just because I'm thinking about building a little building on my side of my house here, but there's lumber prices. Lumber prices you had a huge run up, now 2019, had a big, huge run up, and then you come back down and take a look at where it's at now. It has settled back down there in that kind of bottom out there at about 540 linear foot. So if you take a look at where it's at now, right now this morning it's trading at 895.90. That's a big jump from where it was, I guess. So what are your thoughts on lumber right now, and what direction do you see it going, I guess?
Sideways.
Okay.
Our general view is that we're in a post-bubble pop market. And so, we had that crazy all-time record high, double, triple what had ever been before in history, and then crash, and burn. And now we're establishing a sideways trading range, volatile sideways trading range that probably is going to persist for an extended period of time, Casey. I think that's usually what happens after markets crash from a bubble top, is they find a place and they just consolidate for a while and let the market, just absorb everything that just happened and really determine, is that the right price or not? And I think we're just stuck in this back and forth, volatile trading range. So to me, if you're a producer of lumber, cast selling the upper end of the trading range, if you're a buyer of lumber buying the bottom of the trading range, I just think that's your marketing plan for 2022,
Yep. Okay. Jump over, talk one more energy market here real quick. Hit on oil. We talked about earlier in the podcast here, but right now West Texas is trading about 64.84. Huge fall off. It's been bouncing back up. It's trading down a little bit today, but as you take a look at what's going on in the overall oil market, OPEC met the other day, yesterday, I believe, and I think there's yesterday and today that they're meeting, talk about production and what they're going to do there. With the price of oil as low as it is, would you expect to see OPEC to start drawing back some of their production?
And they've already constrained production for a long time, Casey. I don't think they're interested in reducing. I think they're interested in producing more crude oil. Now, they might do. I don't see anything that says $64 is a low enough price for them to be worried that that. I don't think they're going to right now. I think 85 probably got a little overheated. Probably never should have gotten there. And you have to remember, they don't want the U.S. to produce like crazy, like we did a few years back. They want to keep the whole fracking thing kind of contained. Well, you're not going to contain U.S. fracking at 85. I think that they want to keep it at a level that's still profitable for them, but not so profitable that the U.S. gains market share. And I think 60s is the right number, quite frankly. Mm-hmm. It's good, but not great for the U.S. It's really good for them. And it keeps everyone saying, all right, we're not going to invest in that new property. We're not going to drill that new well. We're just going to hold off because it's not a good enough deal for us to take the risk right now,
Okay. Yep. All right. Last thing, and then we'll close it down here. Earlier this week, Jerome Powell came out and talked about how we need to retire the word transitory in talks, which I don't know how you retire a word that probably should never have been put in place anyway. But nonetheless, the inflationary talks the Fed has pretty much made a promise. I don't know, promise isn't the right word to use, but had pointed towards that between sometime March, April, May timeframe to look for some quantitative easing to start, doing some more advanced tapering, and probably start to look at interest rates going up. What effect do you think that'll have on the market moving into 2022?
Well, I think the whole transitory thing. I think where they misjudged the transitory thing is that it might be transitory, but it's not 6 months transitory, maybe 5 years transitory, right? So,
Right.
A lot of the bottlenecks, we will get the system improved over time. It will get better. I mean, begrudgingly slowly. I just think they thought it was going to be a quicker transitory, not a longer transitory. And so now they realized they made a mistake and are now thinking they need to do something to ease back that this inflation might not just be an up down thing. I take the view: are they really serious about tapering? Are they really serious about raising rates like crazy? I'm not sure how serious they are. I know they might do a little bit, but I don't really think they can, Casey, with all the spending that the government has approved. I mean, I'm not sure how do you pull back on the money printing? How do you pull back on the liquidity? How do you pull back on all of that when tens of trillions of dollars are going to be spent on approved programs? I'm not sure you can do it. I don't think that you can do it without having a big problem. We're 2020 is an election year. Governments love to spend money in an election year. They love to buy votes. And, I just don't see an aggressive tightening and interest rate increase and causing the punch bowl to be taken away during an election year. He was just reappointed, right?
Right.
You'd have to believe they got in a room together and said, "Kind of on board here." I'm speculating. I'm totally speculating, but
it's pretty good speculation.
You kind of know what we need to do, right? You kind of on board, talk a lot, say a lot, but don't do a lot. I just have the sneaky suspicion that's what we're looking at.
Yeah, I would agree. I think that your hypothesis there is probably pretty close to what happened. I would guess. Yeah, because you got Janet Yellen on the other side talking the same thing from a Treasury perspective, and having the Fed chair and the Treasury chairman or whatever her title is, talking together is it's kind of one of those supposed to have separate but equal type approach to that thing there. So it's a little suspect there, but nonetheless.
Great.
All right, Shawn, good stuff as usual. Folks want to reach out to you and get more information about what's going on. What's the best way to do that?
Hackett, HACKETT, advisors.com. Lots of information on there about what we do, how we do it, to see if what we do could be of value to your listeners.
Right on. And on that same point, if folks want to reach out to you and try to book you for a speaking engagement, what's the best way to do that?
On our website, there's a tab on speaker engagement on the front page that takes us to our booking agent, the Tiller Group, that they can book us if they want to. So
right on. Sounds good, man. Well, Shawn, appreciate you being on the podcast. Thanks for taking the time.
That sounds good, Casey. Thank you so much. Have a super day.
You too, man. I'm Casey Seymour with Moving Iron Podcast. Check me out on Facebook, Twitter, and Instagram. That's where you're going to find the latest editions of the Moving Iron Podcast. Also go to MovingIronLLC.com for everything Moving Iron related. So with that, I am Casey Seymour with Shawn Hackett. Let's go smart, folks. Out.
You want to have a meaningful competitive advantage to help sell more equipment. Whether you represent the sales, parts, or management department of an implement dealership, there's a surprising amount of complexity when it comes to tire, wheel, and track technology. Let Axon worry about that so you can get back to supporting your customers. Axon has leveraged years of experience to create a streamlined process that gives you a proven path to help today's grower and sell more equipment. The roots of their organization go back almost 100 years to the invention of the rubber tractor tire. Supporting agriculture is the number one driver of Axon, from product development through sales and service. To find more or become an Axon dealer, head over to AxonTire.com.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron time and time again. Through the years you'll find us here.